2016 saw the Toronto Stock Exchange able to outperform just about everyone. But can we do it again this year? To find out whether that's possible, we are joined by Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital. Diana, thanks so much for joining us this morning. We appreciate you taking the time. I want to get your idea on the cyclical trade and the way it's going to benefit the Canadian market, because that could suggest more weakness in the Canadian dollar. It is trading a little bit lower this morning. How does one hedge against something like that?
The currency markets have various through futures, forwards. You can hedge the Canadian dollar. If you are a Canadian investor, your local investment will not be affected so much. You're spending in Canadian dollars, you're investing in the Canadian market, that's fine. Where it hurts is for the foreign investor coming into the Canadian market. We know that that is a large portion of trading on the TSX. We know what happens to Toronto volumes when the U.S. is closed. So from that perspective, the Canadian dollar can be hedged back. It's a tale of two sides. A weaker Canadian dollar is not bad for our export-led economy. And in terms of the cyclical trade, with developed markets helping to grow and helping into the global growth situation, Canadian market, as long as our major sectors hold up, which is energy, financials, we should be doing okay as well.
So, but the concern, of course, is that perhaps we'll see some geopolitical risk start to mount. So I'm curious how you're factoring that in for 2017.
You know, that's an excellent question. The geopolitical risk, I'm assuming you're talking about Mr. Trump tweets on China and
That's
so
at the
forth.
center of it, certainly.
Yeah.
you could draw all the other geopolitical risks connected to the real Donald Trump Twitter account.
To
I
the
think
Death
that's
Star.
fair. Yeah.
Absolutely. Well, you know what? Let's just go to Europe for a second. And we had UK manufacturing PMI, because Europe is also a bit of a hotbed in terms of maybe to some geopolitical issues that are going on there. But from an economy perspective, we've seen manufacturing PMI doing really well, best in 4 years, as a matter of fact. And in terms of China, the PMI there overnight was good as well. You know, people are talking on trading desk about how China's trying to put controls on the capital, and that will actually trigger some capital out sooner rather than later, while possible. This may or may not play into any kind of bearish calculations into the Canadian housing market as it relates to what happens if rates do move up going forward. And you know, we don't see it in the next year, but maybe in two, as a rate increase in the U.S. is a de facto rate cut in Canada. But so it plays into the Canadian dollar staying weaker relative to the U.S., but it does play into the U.S. dollar continued strength as growth and the rate hike continuation will be supportive, as well as flows. We've just seen the beginning of the flows.
I'm just curious, to make this my final question to you, Diana. We just have about 45 seconds left,
yeah.
But I'm curious to know, with the low Canadian dollar, we've had some strategists theorize that perhaps we won't really see the benefits, certainly we haven't really yet, in manufacturing, because the low Canadian dollar, while it's in theory supposed to be able to incentivize the manufacturing sector to expand, to spend more, to create more jobs, all we've really seen is, instead of bolstering economic growth, it's just bolstering the bottom line of certain manufacturers. How do you sort of fit in with that thesis?
I think that there is a lag effect. So everything that's been going on globally in terms of, you know, let's look at regulation. I think that that's a big deal. And I think that zero rate environment has created a mentality where investment was not really put out there. So you haven't seen a lot of manufacturing investment made, and some people fear that some of that sector has already been shortened. I think that as the world normalizes in terms of rates, investment will come back differently. and get pushed forward. And so I think that to the extent that the Canadian dollar stays weaker and trade grows and global growth actually takes off a little bit, we don't want too much, I think that you'll see some lagged and delayed effect.
All right, Diana, thanks so much and all the best in 2017. We appreciate your time.
Thank you very much. Likewise.
That was Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital. She joined us from the Toronto Stock Exchange.